we've had another month in February of record levels of immigration. We're borderline irresponsible from the government with the levels of immigration that we have.
If you're reading headlines and you're shit scared, there's a reason, because you're just reading headlines, right?
The banks, they're predicting as well whether it's going to go up and down. So it's not just the media.
It doesn't help that I've put on 5 kilos in the last.
Oh, have you? Only?
All those Easter eggs.
Oh! Fat shame.
Only 5 kilos? You look like you've done 10.
Bro, I was going to say we've put on 5 kilos, but I didn't want to throw you under the bus.
But
now, game over. I mean, it's on.
You should talk. Have you got a mirror at home?
You look good for someone that's put on 10 kilos.
Thanks, man. I actually, you know what?
Hey, Zaz.
You know what?
You're still here.
Good man, eh? That's good. Man, you look so good.
It's the sympathy, right? My wife's halfway through her pregnancy. If she wants KFC...
That's actually a thing, though. It's
right?
actually a thing.
Is
If
it?
she wants KFC at 10 p.m, I'm having KFC.
Oh, yeah. You were talking about how hard life is for you at the
Life
moment.
is tough, man.
Yeah.
We're sitting down last
absolutely.
night. Like, hey, if there's any, like, all those chocolate bunnies left from Easter? I'm like, yeah, there's one left. Crack it open. Boom.
Yeah,
God.
right.
What's your go-to for Easter?
Well, at the moment, it's the Cadbury bunnies. Yeah.
The Kinder bunnies? Oh,
Really?
Yeah,
Kinder bunnies.
They are good.
Because it's white chocolate inside?
Yeah,
Yeah.
it's a double layer.
Do you
a
like
double
the Kinder
layer.
Bueno as
Yeah,
well?
yeah.
The Kinder Bueno.
And
No.
they're
The
like
bars.
bars.
You know the bars?
Are they the
Oh,
same?
no.
Mm.
Are they the same
You'll be
company?
trying them.
Yeah.
The same company that owns
Yeah.
Nutella owns Kinder, I
Yes.
believe. Yeah.
Yeah.
Or is it Ferrero?
Ferrero
owns
is
Kinder.
Nutella.
sorry. And Nutella.
Yeah, that's right, because it's Nutella in the Ferrero version.
Yeah.
Yeah.
And it's owned
Is that
by
actually
LV.
Nutella?
Yeah.
Yeah. It's
Oh,
Nutella.
It makes
Yeah.
sense.
Yeah.
Yeah.
Because it's
So
hazelnut.
good.
You know, lots of sugar. Have you ever seen the meme and it's like the diagram of a Nutella jar, how much sugar is in there, and like they actually like mate,
There's no sugar in Nutella. It's just
Mate.
it's nuts.
when
It's
I'm
Sweet nuts.
It's hazelnut.
when I'm crying at home just eating Nutella out of a jar
Crush
like with
sugar.
a spoon,
Yeah, it's very healthy.
my sugar levels go
No, but that's the
up.
thing. When your partner's pregnant,
Yeah,
the males put on weight.
it's sympathy weight.
There was a study conducted. It was
Sympathy pains?
funded by Dad Bods
We also
Association.
have we also have sympathy pains during the actual
yeah,
birth as well.
yes.
It's like, oh babe,
Wow.
you know, it's tough. It's tough being a dad.
Oh.
Sorry, Saf.
You know what's also tough?
What's
The
that?
interest rate environment. at the moment.
Mate, Mr. Segway. Mr. Segway over
The
here.
segue is
Because that's
back.
today's topic, right? And we're
Yeah.
back. Look, let's just say we're back. It's property now. This podcast is inspired by Australia's favourite topic, which is property. And we want to inspire some of your property conversations, whether at a barbecue with mates, on your group chat. That's what it's all about. It's good to have everyone back. I'm Michael Carboni. You can call me Carbs. Chris is back. Jason He, Bulla is
Bulla
back.
Bulla, everybody.
How many times do you reckon you heard Bulla?
Oh, man. Like, I think I have nightmares about it. And I was telling the
Wake up,
guys,
You wake up,
like
What's
not,
wrong?
not to sound like an arsehole,
His wife's
but,
like, you're not there anymore, Jason. It's okay.
but as I'm walking through the resort, man, like, if someone says Bulla to me one more time, I'm just going to, like, flip it, man. Like, I'm not even making
Is that the
eye
first time you've
contact.
been?
Yeah.
So when you got there, you were like, oh, this is
Yeah, this is
Bulla.
cool. Oh,
And then
friendly,
second
right?
day, you're like,
Like,
Bulla. And
man.
the third day, like,
Man, you walk past 10 people,
Bulla,
Bulla, and you have to lift your head. Yeah, Bulla.
What's hard
Yeah.
is, like chow,
Yes.
Bulla means hello and goodbye. So you're hearing it twice as much. It's not even just the one reading. You hear it. I think that's correct anyway. I might be making stuff up about languages I don't speak.
Oh. And they say it with such like enthusiasm.
Yeah,
as well,
yeah.
Right? Like you can't not.
And they drive
not
past me in a
say
buggy.
anything.
Bulla. I'm
Did
like,
you
hey, Bulla, man.
did you learn about Fiji time? Did you learn about Fiji time?
Yeah. No hurry,
Like,
no worry,
What
man.
time's it start? 9 o'clock? Yeah, cool. You're there at 10. Like, what's going on?
Yeah, man. That's what they always say.
the
No
best.
hurry, no worry.
great place, though.
It's
Yeah.
the best. Yeah,
It's
Fiji
beautiful.
tourism. Shout out again. And Sav is back with us again as well. Good
Hey.
to have you back.
Ooh,
Not
yay.
scared off after last week.
No, that's right. No.
Still surprised by your dad's. Like,
Yes, that's right.
Your
He
dad-
still hasn't listened to it.
he hasn't listened.
No. So Dad, come
He's
on.
too busy changing
Yeah.
government policy in Europe. This guy, if I realised who we had on the show,
Yeah.
we would have
that's
rolled
right.
out more of a
Give
red
you
carpet
special
for you,
guest.
Sav.
Yeah.
But this week it's a completely different topic, and I want to read a couple of, and Chris, you've already alluded to it, Mr. Segway. I want to read a couple of headlines from the news this week. So firstly, this one's from the AFR. Cecile Lefort wrote, "Market bets the RBA will raise rates by August." Okay. Second one, this is from 9 News Australia. 3 rate rises forecasted for Australia by highly respected economist.
In 2024, or
That's just the heading. I'm only reading the headings. But Judo Bank Chief Executive Advisor Warren Hogan is the respected
he's the man.
economist.
I
Yeah.
think they're all from now. Yeah, I did read them.
Third one, Westpac pushes back interest rate cut prediction in stark warning to Aussie borrowers. Yahoo Finance, and that's by Belinda Grant-Gary. So we've got some headlines saying interest rate rises are coming, some saying lots of interest rate rises are coming, some are saying the next one is still going to be a cut, others are saying on hold. Interest rate predictions, what the actual fuck, Chris?
That's a good way to sum it up.
Yeah.
What the hell? I mean, look, if you're the everyday average punter,
Which I
Aussie
am.
looking to buy a property or relying on some of these predictions that are out there, how do you see the deer through the headlights? Is that the correct terminology?
If it's
Or-
not, we'll make it.
like how do you actually filter
Yeah.
through all the headlines
Yep.
and make sense of what's happening and what's coming out? I mean that's what we're here to talk about today. I mean, there's so many different predictions, and yes, they are predictions, but you know, how do you see through all the headlines and make your own assumptions and make your own judgment call, particularly when you're trying to buy property and you might be heavily tied to what interest rates are doing to whether you can decide to afford a property or not. How do you decide? That's what I want to get to the bottom of today. And what information do you follow?
It's interesting because the information is confusing everyone, right? And you can see that sentiment. I mean, Yahoo Finance, they had a poll a few days ago, and thank you for sharing this with me, Sav. The question was, have you been struggling with your mortgage? 53% said yes, it's difficult to keep up. 17% said, I'm just getting by, which to me, they're like very similar. And then 30% said, no, I'm doing okay. So 70% of people are doing it tough. The sentiment out there reflected by the media is very interesting. How do you think, like, what do you think is, like, Jace, through your mortgage broking business, Kalida, you're speaking to buyers, potential buyers all the time. What is the sentiment out there right now with all of this conflicting info?
Well, the sentiment so far has been pretty good. So we've had a lot of pre-approved customers, first home buyers coming back into the market, successfully buying property, shortened the amount of time to find the right property, and our team being really busy. But I think that's coming off the back of some stability in the interest rate, you know, because this noise, I feel we've had some reprieve for a few months. You know, it hasn't been too much speculation.
Look, it's only been the last 2 weeks that this noise is back.
Yeah,
but I was gonna,
exactly right.
Do you think it's stability, or do you think it's the fact that people think rates are going to go down next? Well,
Yeah.
for the last 6 months, we've been hearing rates are on pause at 4.1% for the cash rate, and then including us, some of us have been saying the next movement is down now, and that's the stability side of things. So people think I can make decisions now because rates are moving down as the next move, so I'm happy to take that chance. But now, over the last week, 2 weeks, 3 weeks, with some change in data, which we'll go through, the headlines have been potentially rate rises, and some headlines 3 rate rises.
Yep.
Do you think what impact do you think that's going to have?
Man, I think that's definitely going to impact people's confidence, because you've got to remember that there's a lot of people in the market who are able to buy, right? So now with news like that, and it's hard to kind of, shield yourself and not be affected, even if you do understand that a lot of it could be the media creating content, making conversations out of it, right? Like you said, it's very hard to work it out yourself. And even when you look at these sources, it's even harder to work it out, right? So when you see this sort of uncertainty, or some people predicting this, some people predicting that, you might then think, oh, you know what, I'll just see what happens, and delay
part,
your
though,
transaction.
It's like that the banks are part of this conversation as well, because I think maybe you've got the stats there, but it's like the banks, they're predicting as well whether it's going to go up and down. So it's not just the media.
Well,
The banks as well.
That's actually a really good point.
I've got that data here, Sav. So the banks, so CBA, as of February, so this may have changed, but as of February, they're predicting 3 rate cuts in 2024 with the first in September. That may have changed, I believe, so that's probably old data. Westpac were predicting 2 in 2024 with the first in November.
Rate cuts.
Yes. NAB were predicting 1 in November. ANZ predicting a cut in the fourth quarter. So the banks are still predicting cuts, and this is where, so I think from a sentiment position, like, and I know myself personally, right? I've been going through this year thinking a rate cut would be nice for my personal position, but worst case scenario, it's probably going to be the same. It's probably going to be even all year. There will be no change for 2024. That's how I've been going into this year, right? So in terms of sentiment, from that perspective, I go, look, if it stays the same, I'm okay. So I feel comfortable with that. But the last 2 weeks, you start hearing a guy like Warren Hogan, from Judo Bank, saying 3 interest rate rises. Alarm bells go off in my head, because 3 interest rate rises,
So-
that's tough.
So who have we had coming out saying rate rises? So we've had Warren from Judo Bank.
It's been Warren.
Have any of the banks come out and said, any of the other banks come out and said, we
There's
think
actually
rate
been some cuts. Like Macquarie Bank, I think, cut their rates.
They've cut their own rates. Maybe
Yeah.
you can speak on that.
outside
Yeah.
of the normal
Yeah,
cycle.
because they're anticipating for it to.
So we're seeing anyone,
Hold on.
any
but
other
what,
banks?
What rates are they cutting?
Oh, they're basically just reducing their rate by like 1 basis point, 0.01%.
Is that their
That's-
fixed rates?
No, that's their variable rate.
The variable.
But that's
Ah.
more around being competitive.
Oh, right.
Right.
Okay.
Right. So, 0.01, just for example.
trying to drum up more business.
Correct. So there was an article a couple of weeks ago with NAB reducing their interest rate by 1%. It's not actually a reduction on the effective rate that people are paying by 1%. It's what the advertised rate is being reduced by 1%. So it's kind of like the
So
recommended retail
misleading.
price
Yep.
has reduced by 1%.
Yeah.
Because like I want to dig into who is. So we've had all the rate cut discussions for the last 6 months. We've now got rate rise discussions. So we've got Warren Hogan from Judo Bank saying potentially 3 rate rises to come. Who increases? Who else is saying increases?
So looking at the headlines, right? The banks have not. None of the banks have come out and said there will be an increase.
Okay.
The banks have simply pushed back when they believe a decrease may occur, right? So they've gone from like September to November in most cases, but it's the market. The headline from AFR, Celia Lafort, the market bets that RBA will raise rates.
Yep.
So this is more of a consumer sentiment issue more so than the banks.
I think it's more on the trader side, so that they can actually the bond rate can
Yep.
dictate, can show basically what they think interest rates will be in 12, 24, and etc. beyond. So they can see what the rates are, what traders are basically saying what the rates will be at a particular point in time in future. Now that when there's new data that comes out, like employment data or inflation data, that can either spike up or down. And that's because of, if there's strong inflation data, as in inflation was to go back to 5%, there'd be massive bets from traders to say, hey, there's going to be interest rate rises, which there would be if inflation went back to anywhere above where it is.
Well, is that maybe why we're predicting it to go up? Because
Well, that's where
inflation is still so high.
Correct. So
Yeah.
inflation is now back at 3.5%, the recent data that's come out, probably even at 4%, what we're thinking. There's even some government subsidies in there that's probably offsetting some of the real inflation that's out there, particularly on the energy side of things. So real inflation, they think, is probably closer to 4%, which would be a massive concern for the RBA. So that's one data point that's come out in the last few weeks that I believe would be of a concern to the RBA. And that's probably one of the reasons why these headlines are now coming back out, because inflation isn't in the 2 to 3% band that we all thought, even including myself, where we all thought it would be in the next few months. It's not there yet.
Well, I want to dig deeper into this, right?
Yep.
And I want to backtrack a little bit too, because this is actually what, if you're reading headlines and you're shit scared, there's a reason, because you're just
It's the
reading
data.
headlines, right? But we need to understand, we need to be able to unpack and understand this data when we're reading the headlines so that we can make our own personal opinion on what we think is going to happen next. Back in May, it's only May now. But a couple of months, I think it was around March, we're looking at inflation data and things were coming down and things were projected to come down. So this is when all the banks and everyone, not the banks only, but media was saying, yeah, the next rate rise is going to be down. It may be sooner than we think. And this was the headlines back then, right? And we even spoke about it in this room probably about 10 episodes ago. So inflation coming down, et cetera, but now things are moving. So this is the kind of data you need to be able to read. Can we dig more into the data?
And this is where we always talk about, we've always said I hate predictions, because it is based off historic data and data that's coming out. There's no one that has the forecast of data for the next 12 months. You can make forecasts, but it's not actual data. So new inflation data has come out suggesting that inflation is being much more sticky than we've all anticipated.
What's sticky mean?
It's staying around for longer than we think. So it's not going into the target range of 2 to 3%, which is where the RBA wants to see inflation. It's sitting above at 3.5, probably closer to 4%. So still heading back up. One of the real key elements of that inflation data is rents. Rents are still rising, which is, a bigger concern on the housing side of things, but rents are still rising. So inflation data is one of the key metrics that the RBA is looking at. And the second metric that the RBA is looking at is employment data. We're still very strong in our employment data. It came out, it was at 4.1%, and then there was recent data that suggested the unemployment rate was 3.7%.
Yeah, and that's right. And at that time,
It was a shock.
when it was
that
at
data.
4.1, everyone was suggesting it was going up. It was on the way up, and then the next read was down. So,
Well, the reality is with employment data, if unemployment rate was around that 4.5%, we're starting to see cuts. But because it's gone back to 3.7%, we've now seen inflation tick back up. These are the two pieces of data that cause massive concern for the RBA. And this is where we're getting the headlines now coming out in the last few weeks about interest rates potentially going up because of these two pieces of data. And we've always said on this show that you need to be able to look at what the data is doing to be able to make your predictions in the short term as to what rates are going to do. So this is really the two pieces of data that people need to focus on: the unemployment rates and probably even further the participation rates in employment, together with the inflation data and what's driving inflation. Well, this is where I wanted to talk on. So we'd look at what are one of the key items that are rising, which is rents. Look, immigration. We've had another month in February of record levels of immigration. We're borderline irresponsible from the government with the levels of immigration that we have. Like, we know people want to come to Australia. I get it, but a real short-term solution to the rental crisis that we have is to reduce immigration and reduce it immediately. It's a huge problem.
I think rent's been up by about 2%, but then other inflation data showed that education is actually going up massively, and also medical expenses. So it's interesting to see, because these are like basic things that people need, and these are the things that are going up.
medical in our like family line items.
Yeah,
in our
medical and
budget.
hospital
Yeah,
services.
medical is
Yeah.
like something that, like, because there used to be like the gap between Medicare and
Yeah.
medical is like rising,
Yeah.
and it's just something that none of us were really prepared for.
Yeah.
It's a good point. I think the education side was like 6% or 5.9%.
Yeah, it's
was
very
huge.
high.
And that
yeah.
could be why it's proving to be sticky,
Yeah.
because these are the things that you can't just give up.
No.
And I think we had a chat about this in one of the past episodes, is that going to the dentist, or for example going to the hairdresser, stuff like that, like your basic needs and services, education, you can't cut that out.
Well, if you're
Yeah.
midway
Things
through
are
a
getting
uni degree, what are you going
expensive.
to do?
Yeah.
You can push
Yeah.
things back, but that
Yeah.
just causes more pressure down the
Yeah.
long run as well.
That's right. Well, especially rent. What
Well, rent, you
what
can't
can
really.
anybody do about it?
Yeah.
Yeah, as a consumer,
Not much, James.
nothing.
No.
So that's why I think people are getting frustrated. And with interest rates going up, potentially, well, the loans or the interest rate on loans are going to go up. Then property investors or landlords may feel that there's more of a reason to increase
Yeah.
their rent
Yeah.
to make up for that shortfall and so forth, right?
It was interesting as well that the inflation reading also had energy, so electricity costs, which were still rising, but not as fast as what they have been. But that the inflation data noted that there's government subsidies at the moment for energy, which is artificially bringing down inflation. So the real
Yeah.
underlying inflation is a huge problem. These government subsidies that people are probably receiving for energy, the reality is they're probably getting a subsidy and spending it on something else.
Yeah, it's about $200, I think. I do get the notifications for it.
Yeah. So
it's
like,
it's not.
are they saving
Yeah.
that money, or they're
Yeah.
just spending it on something
Yeah.
else? Which is so.
Mm.
Are these government subsidies, which are supposed to help on the inflation side, actually causing more inflation? Are they inflationary?
There's another issue coming up that I'm not hearing anyone speaking about really in regard to this, right? And that is, and this is a good thing, but it could be a bad thing for inflation. July 1, stage 3 tax cuts are coming in.
Yeah.
Right? So everyone's going to find an extra couple of dollars in their pay packet, right? The financial implications could be, or will probably be, the same as a rate cut.
Chips are going back to $10.
Yeah, but this is what I'm saying, right? So that's great. I look at that from a personal view.
Yeah.
Mad. Tax-free rate cuts, great. It's a few extra dollars. I can save a bit more. But as we know, and as I say almost every week now, if you give someone $50, $100, they're going to spend that money. And you've just said it here too. So people getting $200
They're gonna spend
rebates,
55.
they're spending it. Yeah. So if I get an extra $100 every week in my pay packet, mate, maybe I can go out to dinner this week. Whatever. I think one of the reasons why RBA has probably held off for this long so far without making any movement is I think they may actually be waiting for July 1 and the data that comes from July 1, because effectively we're going to get if you're working, you're going to get a rate cut theoretically, in terms of dollar value at
From
that
the
time.
tax cuts.
From the tax cut, right? So we know
Well, but
that
the interesting thing about that is everyone will get it.
Everyone
As
will get
opposed to with rate cuts,
just
mortgage
people with a
holders.
mortgage,
Yeah.
correct?
Yeah.
Yeah. So this is the thing, right? If I'm a little bit older, I've paid off my mortgage, whatever, that's great. I'm spending that extra $100.
But most of that is within a certain range, right? Like it's the middle class. It's like up to 130,000. Most of the cuts.
Primarily
Yeah.
affected is I think 130,000 and below, which is
Yeah.
I think a lot of
Yeah.
But
Australian workers.
everyone
Yeah.
will see a cut.
Yeah, that's right.
Like
But the majority.
everyone working
yeah.
and paying tax will
Yeah.
see.
I think everyone, so I think the point is everyone's going to have more money,
Yeah.
whether it's
yeah,
$1 or whether it's
Yeah, of course.
$2,000. Everyone's going to have
So what
more
I'm,
money on a weekly basis.
for me personally, like, and this is not financial advice, right? This is general. But whatever I see extra in that pay packet, I'm pretending it's not there. Like I'm saving this. Like I'm not going out for the
Are
extra
you
meal.
really though?
I am, me personally, Michael Carboni, I am. Like I'm not spending an extra dollar.
Yeah.
But a lot of people will. Not everyone is Michael Carboni.
So you're saying
Yeah.
inflation?
I'm saying, guys, hold on to your hats and don't
Yeah.
buy the $10 chips. Like I'm saying, because this July 1 is going to be interesting, man.
So like what I'm interested in. So we've all been saying, and I know Sav, you on the show, but a lot of us here have been saying that rate cuts are next. Rate cuts are next. Does anyone think that position's changed?
I do. I've been feeling a little bit like this all year. It's hard because from a personal perspective,
You want it.
I want it, right? But I know the best move is actually no movement at all for the rest of the year. I think no rate cuts for the rest of the year is actually a good thing. I would hate to see an increase because I don't think hurting mortgage owners more is going to really help the situation. I think we've got to be looking at other
But
things.
what's worse? Higher inflation?
Yeah, but is it actually helping inflation? This podcast is brought to you by Coposit, where 10K means you can buy a brand new property. That's right. It sounds too good to be true, but it's not. Check it out, coposit.com.au.
At the end of the day, if inflation stays high for longer, that hurts everybody.
It does hurt everybody, but if we can turn off some of the immigration and help rental, and et cetera, maybe there's other things we can be doing other than hurting the first home buyer who's got $1 million mortgage.
But what if those interest rates are the new normal? Like what? Like the 2% or whatever it was before, that was extremely low. What if this is the new
We're
normal?
closer to normal
right?
now
yeah.
than we were back
That's
then.
right.
Yeah,
So,
that was abnormal, right?
You know, the speculation around whether it's going up. Yeah, it will go up if inflation goes up. But
I think the biggest difference
go
between so rates have obviously been this before, back in probably 2017, 18,
Yeah.
but property has probably doubled since then. So people's mortgages have effectively doubled at the same interest rate from 2017 to now.
yeah.
So if you had I just call it 300 grand mortgage, it's probably 600-700 grand now. So you got to find that, and obviously, of course, as we know, wages haven't moved up that quick either. They haven't doubled in the last.
Yeah.
But I'll
8
tell you
years.
personally, I'll talk personal numbers. From the 2% to the 6% that I'm paying now, I've had to find an extra, between $2.5 grand a month, right? 3 extra rate rises, that hurts, right?
Yeah, but you know what you don't feel, and so you feel that on the mortgage side because you see it monthly.
Yeah,
it's a
yeah,
big
yeah.
chunk coming out.
Yeah.
What you don't feel,
Inflation.
the inflation is way more dangerous than your increased mortgage
Yeah,
payments.
I get that.
And that's across the board. So you're going to the store, you're paying more in groceries. You're going to buy dinner, you're paying more to buy dinner. You're going to fill up your car, you're paying more,
More
on
to
fuel.
fill up your car. And I get that
So
fundamentally.
that's
on a
why
macro,
inflation is more dangerous.
On a macro, I get that. But what I'm saying is, if we see 3 interest rate rises, now we're going to see some real pain. Well, you know how we've been talking about if rates keep rising, people are going to force sell. We might start to see some of that because people are hurting. Like you look back to this Yahoo, what's it called?
The finance data.
Yes.
Cut a piece. Back to the Yahoo survey, right?
Yes,
70% of people are
Yeah,
already
yeah,
hurting.
yes.
70% of people surveyed, and there was 2,841
That was a live
votes.
poll.
Live poll.
actually,
70% of
yeah.
people hurting already. So you add 3 interest rate rises to the 70% of people already hurting.
That's mortgage holders.
Yeah.
Yeah.
Yes.
We might see some forced selling. Is this actually what they want? Is this what needs to happen?
Yeah.
And I'm using bunny.
Where are those people going to go? They're going to go and
Like,
rent?
are they trying to force
Well,
this sort of
that's
pressure? And they're going to go and rent. That's right.
Yeah.
And
Yeah.
look, where property is at the moment, they'll probably have some equity, be cashed up, so they can afford to maybe pay more on rent. And that's going to maybe drive up inflation even further. I think one thing government, and we always come back to this, government needs to do right now, is look at the immigration numbers. They just need to go back. Like we're on trajectory to have record immigration again. This year, like 800,000 net migration, as opposed to 200-300, which has been the norm for the pre-COVID for the better part of 10, 15, 20 years. That's a huge problem. We need to house these people coming in, and we're not building.
And we always say, look, we are probably pro Big Australia, but not at the expense of people that are already here. Like, no way.
Pro Big Australia, but not pro people
Not
having
like
to
this.
like Australians can't find a property to live in and living on the streets. I'm not pro of that.
We spoke about squatting last week. Like, this is not, and that being a
That's
solution.
That's
like,
where we're at.
This is ridiculous that that's even a solution, right? So this is what I'm saying. Like, do we agree? Like, are interest rates actually going up? Would that actually help inflation, Chris?
Oh, look, it definitely will. It'll definitely take the steam. I mean, look, we'll take the steam out of property price rises. I think that'll be a real issue on property. I think people are expecting rates to come down next. I think that's what's been talked about for the last 4 to 6 months, and I think that's what's giving people confidence to go out there and transact and buy property. That they think the next movement, whether it's in a month or 6 months or 12 months, is going to be down. So the next best thing to rates staying the same is rates coming down for a mortgage holder.
So
That's not good for the overall economy. I mean, if rates coming down, that means there's weakness in the economy.
Which is
There's
why
problems.
staying flat is probably the best case scenario, I think, for everyone. Jace, what sort of effect? Let's talk about property. And we know the RBA say the rates aren't only about property; it's about the wider economy. But this is property now. What sort of effect will this change mentality, etc., have on the property market itself?
Look, rates going up means a reduced borrowing capacity. So we're seeing government benefits for first home buyers around deposits, but none of that stuff helps people's borrowing capacity. So you might, have, say, 25 grand, the 5% that you need to buy property. But if you don't have the borrowing capacity to borrow the remaining 95%, you still can't get into the property. So if the rates are going to go up, your borrowing capacity is going to be reduced because your borrowing capacity is going to be assessed at a higher rate on a high repayment that you need to demonstrate that you can afford, right? So, and there's also the assessment rate. So if rates go up by another 0.25, you'll need to prove to the bank that you can afford the loan at more than 10%. Like, you're not actually paying 10, but that's what the bank assesses you at, a 3% on top of the actual rate, right? So, in addition to that, that's going to make people think about, if there's chances of rates going up, do I really want to make that decision and get into the market now? Because I could be in a situation where I don't have a lot of buffer, right? So that's where I think you have to have your individual conversations with your mortgage broker around understanding what happens. So that's the repayment at the moment based on what you're looking at buying. But what happens if the rate goes up 3 times? Can you let me know what my repayment will be? And you need to work that out against your budget, right? So we're talking about with the tax cuts, you're going to have more money. So this is more important than ever. You must have a budget. If you don't have a budget, like what you're asking, are you really going to put that money away, or are you going to spend it? If you don't have a budget, you're going to spend it because you're not tracking it.
You don't know.
Correct. So you need a budget.
How are they going to know?
They're never going to know, right? And you also need to make sure you understand it for your personal situation. Yes, it's good to be aware of what's going on the economy, on the macro side of things. But that's still the macro side of things, right? It's not your individual situation. So you got to have that conversation around what does this mean? Or potentially, could a fixed rate be better for you? We know that the fixed rates are higher, and we know that the Australian like to have that attitude of having a gamble, having a punt. I don't want to lock it in. I reckon rates are going to come down. I don't want to be overpaying. But fixed rates...
So fixed rates could be a good solution.
Correct, because I always tell my clients that fixed rates is not there for you to have a punt. Fixed rates is for you to have certainty in your budget.
Yeah.
I actually like that, to be honest. I think I've actually, as my personal investing journey, I've never really considered fixed rates. But I think at the moment, with so much information, I've never seen so much information out there about predictions in my investment journey over 15, 20 years. So many different predictions that are out there. Rates going down, rates staying on hold, rates going up. Like it's very confusing at the moment. Maybe one way to really see through all that noise is if you've got a budget and you know your income and you know I can afford X amount per month based on this interest rate. If you fix that for 3-4 years, maybe that's a really good solution to say, you know what, I don't really care about what's happening.
Oh,
in terms
100%.
in terms
You
of
can
the
then
noise.
sleep easy if
I've
you
got
can
that
afford to do
3-4
that.
years
Yeah.
of fixed interest rates.
Yep.
And Sav, I know you're really interested on that, to
Yeah.
particularly as an aspiring first-time buyer yourself,
Mm,
looking at how can I get some certainty in a really, really uncertain
absolutely.
headline environment.
Yeah. Yeah, I never really considered that, like fixed rates, because they're so high. It's like, why would I lock myself in? I'd rather take the gamble. But
Yeah.
are you actually, you're having these conversations
Such an
with
Aussie now.
first time buyers.
Yeah,
and,
exactly.
and do you see that shift towards more fixed rates or?
Still not.
Not,
Like the takeoff
okay.
of fixed rates is
Yeah.
still really low.
It's-
And
Yeah.
traditionally, culturally, that's how it is.
Yeah. Yeah.
In Australia,
Mm,
majority of people like variable rates.
yeah.
Right. But say for in the UK, majority of borrowers are on fixed rates. Right.
Oh.
In the US, you have a 30-year fixed rate.
Wow.
Right. We have a maximum of, I think, up to 10 years on a fixed rate, but nobody will
Right.
consider that.
No.
Even when the variable rate was 2.2% and the
Yeah.
fixed
Look at
rate
that.
was, say,
Yeah.
5% for 10
Mm.
years, nobody looked at that.
Yeah.
Why would I fix it for so long? But whenever a customer asks me, Jason, should I fix my loan or should I go variable? I go, the question is not whether you should or where interest rates are going to go. The question is, do you want the certainty or are you happy to play by how the market's going
That's
to go?
great. That's good advice.
I was going to say
Yeah.
that is great advice, because
Yeah.
really, like the answer that you're expecting as a buyer is, oh yeah, do you think interest rates are going to go up or down? That's
Yeah.
actually not the right
Correct.
response. The correct response is based off your budget and based off what you think your earnings going to be this year, next year, and into the future. Can you afford this payment for that fixed period?
And taking it further, right, I'd be looking at, so, okay, let's look at the headlines. If things stay the same, I'm okay. If they go down, I'm obviously okay because I'm okay now. If they go up once, am I okay? If they go up 3 times, am I okay? You've got to be looking at reading the data, inflation changes, blah, 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 blah. Oh, okay, shit, maybe this means the next move is up. Am I okay?
Whereas on fixed, you don't need to do any of that.
On fixed, you don't have to, but that's how you make your decision whether you're
But
fixing
there's
or not.
that it makes such a difference for
Yeah.
the rate to drop slightly. Like you're
Yeah.
just paying interest, which is not even paying off your actual house.
It would burn
So
me
that's
if I was on
why-
a fixed rate and
yeah.
I was going down. It would
Yeah,
burn me.
See, that's the
Yes,
thing, right? But
yeah.
what I find interesting,
Yeah.
car loans
Yeah,
are majority fixed rates.
yeah,
Right.
yeah.
Most people have a fixed rate car loan.
But car loans are a lot shorter than a house
Right.
loan.
Yeah,
Yeah.
but you know
And
they
the
don't think
amount
about,
is
can I
less.
get a variable loan for
Yeah.
car loans can go for 5 years.
Yeah.
Like a
Yeah.
lot of them do
Yeah,
go
yeah.
for 5 years to
Yeah.
make the repayment cheaper.
Yeah.
Yep.
But very rarely a customer asks me, is there a variable car loan option? Which there is. You know,
Right.
does that exist? But it's by default fixed rate. So
Is there a reason for that? Like, do the car manufacturers get more from a fixed rate? Like, what are they? Because they're very pushy at the sales stage. Is there a reason that culturally fixed rate is okay over here, but variable rate's okay over here? Like,
I don't know. Like maybe if I think about it, it's probably just how it's being done
Yeah.
in the past. But I don't know whether there's a particular reason or there's a lack of offering.
Chris keeps smiling at me. Do you have something you want to add to
No, I
this?
just, back to interest rates. So I'm just trying.
Yeah.
Like Chris
We wanted car loans. No,
Yeah,
no,
it's cars now. So what are you driving at the moment? No, so how does
sorry, I'm just trying to.
so how does this as a we've already Chris has alluded to this as well. I am trying to look at you, but I'm also trying to talk to my mind. But as a mum, you know, new Aussie, you've been here for 10 years, but you still got the accent. You're looking to buy your first home. How
Yeah.
do you feel hearing all of this stuff in the media?
I don't know. I would wait it out. Like I would wait either until it stabilizes
Yeah.
for a certain period or the sentiment shifts.
So that's interesting, right? This
Yeah.
is what we're
Because-
talking about.
Yeah.
Because you've
Yeah.
heard that going to go up.
Yeah, just because there's so much uncertainty. It's like, do I really want to expose myself to that at the moment? Like to
So,
buy
but how
in that
would you feel if you
environment?
waited it out and it
Well,
didn't
that's
go
the
up?
other thing. It's like, okay, well, this is just a moment in time. Am I better off buying now and just riding it out because I'll be missing out in the long
But
long run?
But this is the exact
It's a problem.
problem
Yeah.
we're
Yeah.
talking
Yeah.
about. Like
Yeah.
people have information overload.
Yeah.
That's
and
right.
like information like paralysis to actually make a
Yeah.
decision
That's right.
because there's
Yeah.
too much information.
If
out
you go
there.
back to what Jason is saying though, then if you can go, because this is critical. Because a couple of months ago you were looking at buying something.
That's right.
You were asking
yeah.
about, should I
Yeah.
buy this
Yeah.
property? I won't say
Yeah.
where.
Yeah.
But and now you're going pause.
Yeah.
So have you paused because of the headlines, or have you paused because you've actually taken stock of your situation and said, hey, if interest rates went up a couple of times, I can't do this?
Yeah, definitely. Like it definitely changes your budget. You don't have as much wiggle room. Do I really want to expose myself to that?
Yeah.
Like as a first home.
I think there'd be a stack of people out there thinking the same thing.
Yeah, because it's like the first time you're doing it, like you're already feeling nervous about it. This just eats into that like fear.
And I would say, like I said, survey of one, there'd be a lot of Australians feeling that way.
Yeah.
I know, again, myself, like I'm going, man, if
Would you recommend someone to buy right now?
If it keeps going up, man, it's tough.
Yeah.
For my household too, like, you know, and we'll be fine, but like it's not easy. And I can understand there'd be a lot of people in a difficult situation. Maybe that's what they're trying to do. I don't know.
Well, they're trying to reduce the spending.
Yeah.
Yeah.
So we always say, like, what can government do? What can government do? I think media maybe has a little bit of a role to play here as well, Jace.
Oh, yeah, look, for sure. Because I think you need to acknowledge that a lot of these articles, you know, there is a motive that the media...
Clickbait.
Yeah, right. It's for readership.
It's clickbait.
Yeah.
You know, uncertainty makes people curious, makes you read it.
Yeah.
So yeah, a lot of this stuff is being created. They're creating content to talk about. Yes, it's from the data, but they're taking that data and creating stories, creating predictions. Right? You know, are the predictions necessary? Right? Like, has anyone asked for predictions? You know, but now that's the stuff that you're seeing. It's telling you this is what you should be reading about.
The big one has been the 3 rate rises forecasted, right? Because that's a relatively new story that went out in the last 7 days. I quoted earlier the 9 News Australia article or video, right?
Yeah.
But that piece was picked up by multiple media
it's out there
institutions, right? And the things they're saying is, like judo bank economist Warren Hogan, right?
Yeah.
He's the only one that has said this. He's the only one that has come out and said it could go up 3 times, right?
Yeah.
No one else has agreed yet. But what do they say? Highly respected economist, right? He's been right before. These are the kind of things they're saying. So, like, we're in a world where it's all been flat. When's the next rate cut? All of a sudden, it's like, hey, hold on. Here's a different piece. 3 rate rises.
Trusted economy.
Clickbait.
Yeah, 100%.
Clickbait.
100%.
Right? Because no
Totally.
one said it yet.
Yeah.
So, man, is this like, I don't know, should they be pushing
but I
this
also
so
think,
hard?
like, no matter how respected or how well you can forecast, coming out now saying 3 rate rises without seeing the data that comes out during that time, I think that's also irresponsible.
It's
I
very
don't care how
irresponsible.
good you are as an economist.
Hey,
because
I was right on my same game multi last week. It doesn't mean I'm going to be right next week. I don't
I
gamble.
think it's just like irresponsible. Like it's the same thing when, to be honest, Philip Lowe was saying rate cuts or rate are not going to rise back in 2021 and 2022, and they went up 13 times. I think like this era of trying to create predictions when we don't have the data coming out. Like, again, even myself, I'm guilty of it. I was saying rates are going to come down based off the data that we had. All of a sudden, we had this uptick in inflation. We had unemployment come down. All of a sudden, I believe that, you know, interest rate cuts aren't coming as soon as I thought or as everyone else thought. So it needs to change as the data changes.
Yeah.
And so to then say 3 rate rises are going to come out in the next year, based off what?
Silly.
Like
Based on wanting to get his name in the news.
Yeah.
Really,
yeah, but
honestly.
based off what? You don't have the data out to come and reliably say that, and it borderlines. Again, I don't care how good of an economist you are. It borderlines on irresponsible because we don't know what interests and motives that they have to have these headlines out there. But like, you need the data to come out during that time, and I really applaud Governor Bullock that she's not getting into this debate about future, like Philip Lowe did. She's basing it off the data. She's telling us that it's based off employment data, unemployment data, and inflation. So everyone's watching those two items. So you need to wait for them to come out before you can say, oh yeah, it's going to go up 50 times before.
And to be fair, you've said that a couple of times, like, oh yeah, back in March you said, yeah, it's coming down.
Based off the
right?
data.
But it was based on the data at the time, right? So based on the data at the time, it was probably a good guess, right? But data has changed.
Mate, it's changed substantially.
But the question is, are we getting data too late? And I've heard Mark Boris speak about this. Are we getting, we're getting yesterday's data, last month's data? Like, is there a way we can get more real-time data?
Look, you can. I mean, you can see, like, underlying items, like education side of things, and on electricity side, you can see that in a lifetime base. But then there's things like commodities. So, like, copper's gone to nearly all-time highs. iron ore has gone back up, oil's gone back
Oil.
up. Like you can see this stuff on a lifetime basis. The commodity-driven inflation is extremely important. So you can kind of see some of this stuff on a lifetime basis.
I filled up petrol last week, and it was so I drive a VW, so I need 95 plus, right? I can't go lower than that. I
Yeah.
can't do the 90.
Premium, dude.
Sorry,
Oh.
it's shit. I actually hate it. I'm like, man, I need to go down the Tesla route, Jace. Cars now. No, sorry. But anyway, so I filled up and it was $2.37, and I
Yeah.
thought this is okay because the previous week was $2.50.
Yeah.
So I'm
Oh my
filling up
goodness.
and I'm going, holy shit! Did I just think $2.37 is okay?
Yeah.
Like I remember, like not long ago, if it was over $2, I'm not
Yeah.
stopping.
But that was subsidized,
I'm
wasn't
not
it?
stopping.
Yeah.
I remember as a kid, Mum used to drive around. If it was 79 cents, she's
It
like,
used to
we
be
can get it at
$1.
69.
My dad and
heard.
I, man,
$1.
legit, my
Right.
dad, we'd fill up his car and I'd come out with him and he'd go, all right, let's guess how much it's going to cost. And I'd go $20 and he'd go $24.
Oh, yeah.
And it's like,
Wow.
what the hell has
Yeah.
happened in the
Yeah.
last 20
That's-
years?
that's
Maybe
right.
30 years.
Yeah.
How old am I?
And you can't cut back on that. Like
It's
you need
insane,
to.
man.
Yeah,
that's
it
the
doesn't
thing.
go back, and that's the danger
Yeah.
of inflation,
Yeah.
isn't it?
Well,
That's
does it
this is the
stay
wider
up?
problem.
we talk
Yeah.
about
It ain't going to go back down.
Well,
No,
inflation, we're
yeah.
trying to target between 2 and 3%.
Oh,
So
that's
that
okay.
means it's still going up by 2 and
Yeah.
3%.
Wow.
Inflation rarely would go negative, right?
Right.
There might be some
But
cases.
your
There's
wage,
definitely
bigger
wages
problems
would
with
go
your
up.
Talk
economy.
to
Yeah,
Japan,
That's
mate.
a
well.
different issue.
Yeah.
Yes.
Right? Okay, we can go round and round on this, but I think like lots of good conversation here as always. Let's try and round off with a bit of advice, right? So maybe advice to yourself.
Advice to me.
Advice to yourself. So let's start with you. Right, looking
Yeah.
at all of this information,
Yeah.
reading all the headlines, what do you want to tell yourself and our listeners?
Speak to Jason.
Speak to Jason. All right. Good. Over to you,
He will
Jason.
talk some sense into me. Yes.
So speak to a
Yes.
mortgage
Yeah.
broker.
Yes.
Because Jason can't
Yes.
handle all of these
Yeah.
legal
Yeah.
advice. We have a million viewers and
Don't give
listeners.
up.
Because I've also got to manage my TikTok.
Yes.
As you guys know.
Yeah. Whilst you're in Fiji, mate, Woola.
There was no Fiji content on TikTok. Anyway,
Yeah.
How's your Wi-Fi over there?
Oh, excellent. Excellent. It must have been Starlink.
So were you over there thinking, like, what's going on with my mortgage? Like, $22 cocktails?
No,
Like,
all
should I be
I
buying
was
another
thinking
one?
was bulla bulla, man.
Bulla bulla.
Yeah, that's all I had in my
What
head.
advice?
You'll need to go to Fiji.
What
Yeah.
advice do you have for
Look, the
yourself?
advice for me is always pretty much the same, right? Yeah, you have to look at and focus what you can control. Yeah, so all this stuff, interest rates, all the data, you can't control it. But what can you control? You can have a budget. Right? You can manage your budget, right? And you can have that conversation or start the conversation with a mortgage broker if you're buying, or with someone else, if you're doing something else like managing your finances, whatever the situation is, and speak to the professional. Don't read the news article and then in your own mind, have this dilemma. What should I do? This is going to happen. And because you're going to have so many assumptions.
Yeah.
But in reality, some of that stuff may not affect you. In reality, some of the stuff may be okay. You might have a buffer, or sometimes it might be you should probably buy now.
Yeah.
Because if your borrowing capacity is going to get reduced as the rates go up,
Yeah.
because the assessment rates are higher, you're going to be borrowing less money and you're going to be priced out of what you're buying, right?
Yeah.
As long as you can understand how the rates affect your
That's an interesting
repayment,
part.
looking at the fixed rates, don't just take the assumption or the generalization that no one's fixing their loan at the moment because the variable rates are so much lower than the fixed rate. What about your particular situation, your risk profile? How you feel about it. Do you want to have the headaches every time this is on the news? Interest rates going up 3 times, right? That you're going to worry about how am I going to manage the budget?
If you fix it and it goes up 3 times, you're going, man, it's all right.
Yeah, but
I might
anything
be
could
in a
happen.
position.
Yeah.
Anything could happen.
I feel like if you fix it and it goes up, you're not as concerned as if you fix it and it goes
And it goes down.
Yeah, you're more annoyed at that as opposed to I'm saving
Because it's
money.
dead money.
What advice do you have for Chris? For
No, look, no advice as such. I think it's just more on the headline side. I think there is a lot of noise out there. There's a lot of headlines. Rates going to be on hold. Rates going to go up. Rates going to come down. I think the reality, and I really want to reinforce the fact that no one knows, including the best economists in the world. No one knows. Even the RBA don't know until the data comes out. So depending on what your personal circumstances are, again, I think speak to your professionals. As we always say, be ready and ready to buy something if that's what you're wanting,
Yeah.
and make the decision based off your personal circumstances. No one can give you general advice without looking at your personal circumstance. So speak to those professionals that are around you to be able to get yourself in a great position to buy if that's what you want to do. But I think, yeah, look, if you're interested, have a look at some of the underlying data. Have a look at the inflation data. Find out what the RBA is wanting to see. Have a look at the unemployment data. Find out what the RBA is wanting to see. Get involved and have a look at what commodity prices are doing. Like, I know it may not be exciting for a lot of people, but that helps give a good indication of what's to come.
You get context for the headlines as well if you know that sort of stuff, right?
Yep.
Yeah.
I know for me personally, I'm staying close to my budget. I'm making sure I can do it. I'm thinking about all those things. But me personally, I am watching very closely what data comes out after July 1, after tax-free cuts, because I think that's going to shape some things. So I don't know if it's going to be good or bad, but it's going to shape some things for sure. So I'm watching that very closely. Guys, one of the best conversations yet. We say that every week. It's been incredible. If you agree, please drop your comments. We're on YouTube. We're on Instagram. We're on probably Facebook. We're on TikTok. We're everywhere.
Spotify.
We're on Spotify. Please subscribe if you haven't already. Tell your friends about this conversation. Watch Jason on TikTok as well.
And I got to say, I'm loving some of the comments we're getting on some of the YouTube
Definitely.
videos.
It's
Like
really nice
the one
to
last
see.
week, we had like 50 30 comments.
I want to
Amazing.
encourage comments and questions as well, because if we get enough questions on YouTube, for example, maybe we'll do a good Q&A episode, because we've got our listeners have great insights as well.
We read them as well, like they're fantastic.
Keep them coming.
Oh yeah.
Keep them coming. So that's it, guys. Property Now. I don't know what we're going to talk about next week, but it's going to be great. Thanks for joining me.
Cool. Over and out.
Cheers.
Mate.
Woo.
The Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and they are general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.